Hey guys, Akil here. Welcome back to another Trading Edge video. If you guys are brand new to the channel, thank you for joining. This is a weekly video that I do every week where I share a few of the top trading ideas that are on my radar for the week ahead, and of course drop some very valuable knowledge bombs for you. Now we have a lot to look at today, as you can see in front of you, but before we hop in, I want to say a big thank you for everyone that showed up and supported me during the trading battle. It was an amazing competition. It was awesome. So glad I agreed to do it. The outcome wasn't what I hoped, but I'm very happy with my performance. With that being said, I will be putting out a video in the near future where I review and critique everything that I did for you guys that like to see that process. It will also show you how I was literally one pip away from having a very good day, which kind of sucked, but if you know trading, that is trading. This is also the perfect time to say, if you're not subscribed to the channel, make sure you do so. Also, make sure you hit that like button. That way YouTube knows you like my stuff. So when I put out new stuff, you are alerted and you don't miss anything. Secondly, we had a very busy news week, perhaps the biggest week of news in the market I've ever seen in my 18-year trading career. And Friday was kind of, I guess, the apex of that, where we had a non-farms report, so a jobs number that missed pretty badly. We had revisions of previous jobs numbers that got revised down. That led to Trump firing the Commissioner of Labor Statistics because of the fake numbers. And although not fired, we did have a Fed Board of Governors member quit. And if you want to know why that's important, go back and listen to Trading Coach Podcast episode 1194, where we talked about the shadow Fed. Now Trump has more bullets in the potential thing that he is looking to do, which is getting kind of fishy. Lastly, August 1st was the tariff deadline, so there's a whole bunch of new tariffs out there as well. And Trump has positioned 2 nuclear subs in appropriate regions because of Russian threats. Yeah, a lot going on in the news. This week, however, not so much. The only main event that we have is the Bank of England interest rate decision coming up on Thursday, where they are expected to cut. So potentially we could have a little bit of respite as we come into our final month of the summer before things ultimately pick back up in September. All right, so let's hop into the charts. We're going to start here on the Euro Dollar Daily. And before I talk about the opportunity that's on my radar for the week ahead, I want to share a few, just a quick lesson on the differences between stop losses, right? So for you guys that are with us on a daily basis at Tier 1 trading, or if you're just familiar with this stuff, what we had here on the Euro Dollar was a bullish Gartley pattern. This is a harmonic pattern. It looks something like this. We have our swing low to swing high being our X to A. This is the starting part of our pattern, the impulse leg. We have our first retracement down being our A to B. We have our failed extension up being our B to C. And then we have a move down to this 127 extension being our D completion. Now, obviously, this pattern has, it went further than the zone, but you may or may not have been stopped out depending on your stop loss plan. And this is a perfect chance to kind of compare and contrast the 2 methods of stops that we teach over on the platform. One is going to be that 113 Fibonacci inversion. So if I take my Fibonacci extension tool, invert it backwards, so instead of going from left to right and down to up, we're going to go right to left and up to down, right? It's wacky backwards day. Yay. That's weird. Anyway, we're going to do that, the things I just said, and we're going to see that a 113 inversion puts us right here. Now, the problem is what also puts us right there is price action. So boom, you would have been stopped out. Boo. The other method would have been an ATR-based stop. An ATR-based stop would have put you a little bit lower, if I remember my maths correctly on here. Oh, I'm not going to remember it. 113. I'm not going to remember it. I'm sorry. I thought I had a good memory, but why would I expect to memorize something from a few days ago? Let's see. Our ATR right here was 90. Our lows right here at the X leg was 114.45. That's going to be 113.54. I was right. I was thinking the 50s, right? So that stop loss for that would have been right down here. So you can see with the 113 stop loss, you would have been stopped out right here as price action hit that level. if you had an ATR stop, you would have been safe. Now, again, not saying one is better than the other, but I know we have a lot of traders over on the platform experimenting and going through the back testing phase. I do think it's worth, if you're not heart set on one or the other, I do think it's worth doing a comparison when you do your testing just to see how the two compare and if one is more beneficial than the other. They both have their pros and their cons, obviously, but while you're going through thousands and thousands and thousands and thousands and thousands of data points, you might as well just add that comparison as well. Now, back to business. Here's what I'm looking for. Obviously, very weak dollar day. All the things I told you, bad jobs, bad unemployment, firing, subs, nuclear stuff. Yeah, all of it. We have rallied up. We've come right back into our previous inside level of structure support, which we would expect to now act as resistance. We've come to a Fibonacci retracement level as well, 50%. By the way, this would have been a winning pattern too, the Gartley pattern, if you didn't get stopped out, right? Boom, 3-2 hit, well done, winner, winner, chicken dinner. We come to a 3-2 Fibonacci, and if we go down to the lower time frame, we have a very interesting scenario, right? So on the 4 hour, we have a level of structure here. We do not have a break and close above that level of structure. We have a high momentum candle. We have a very nice bearish rejection candle right here. We would want a lower low, lower close after that to confirm the move, but we did not get that. So the 4 hour chart is a little bit iffy. It doesn't really give us a full signal. It gives us 2/3 of a signal, and then it doesn't give us the last one. So we don't have to throw away this trading opportunity. What we can do is we can drop down to the hourly and look for something a little bit different. One, you could look for a double top, right? Price action has rallied up. We've retraced. And then we've come back up. And we have not violated what would make this a valid double top. So if you are a double top trader looking to get short in the hourly, you can do so right at market. If you're looking for a more conservative approach, this goes back to what we spoke about a few weeks ago here on the Trading Edge. You can look for that 2618. So look for validation of the double top by violation, right? Validation by violation of the double top by breaking this this low point right here, this valley, and then looking for the retest and move back down here. On the other hand, if you are looking to get bullish, if you do think we're going to see more dollar badness, right? Then just look for a break and close above. It would be this high water mark right here to the upside, and see if we can trade it back up to, where did we trade it back up to? Sorry, I'm getting confusing here, guys. Probably 117s right here is where I would expect to go if we did go to the upside. So cool little decision point here, different options, bullish and bearish here on the euro dollar. Let's see what we have next. Next, we're heading over to good old beastly, the pound yen, and yen had a strong end of the week. You can see here, nice big bearish candle coming all the way down. The question is, where did we end? And if I take a look left, you're gonna see we ended at a previous level of structure. I'm gonna go down one more time frame to my 4 hour chart here. You're gonna see a clearer look at that structure level right down here. You're gonna see that price action had a pretty direct move down there. What, 1, 2, 3, 4 candles down there. Pretty much a straight nosedive from 199.50s to, what is this, 195.33. So just a mere 400 pips, right? Would not surprise me, right? This is called the falling knife, by the way. And there's a big saying out there in trading, don't catch the falling knife. I don't necessarily agree with that. In real life, that would be very, very bad because you would hurt your hands and you wouldn't be able to trade anymore. But in trading life, there's nothing wrong with catching the falling knife if you've done your analysis and you've predicted where the floor is at that the knife would bounce off of. Here we go. Yeah, that works, right? So anyway, what we see here is a massive downward push. At some point, these bears are going to look for some sort of relief. And I want you to ask yourself the question. I want you to ask yourself the question. There we go. If you were a bear, right here, and price went down 400 pips to right there, would you continue to be a bear or would you turn into a profit taker. I should put this emoji there too, because maybe you have to have a think about it. Turn into a profit taker. I think a lot of these bears would turn into profit takers at this level, which means they would no longer be bears. They would actually become bulls because they have to buy out of their selling position to make the profit. So if bears are becoming bulls, and you would assume that perhaps there are some bulls interested down here as well because of the bullish action that we saw in the past, this is a good spot to look for some relief. Now, when I say some relief, I don't know, or I have nothing to show me that this is going to become a long-term bullish trend or anything like that. But what we're looking for is a little bit of a bounce. I usually have a ball somewhere that I can bounce on the table to make this comical, but I don't. So just imagine ball, right? Bouncing. So this is a decent place to look for a buying opportunity. One thing that I would like to look for here is, or a few ways. One, a higher high, higher close would be a good sign. You can look for, we talked about double tops and double bottoms already. You can look for a double bottom at this area as a more conservative sign. But this is a decent level of structure. Price action has clearly pushed down aggressively. We're oversold on the RSI. We did get a little sign of bullish relief at the bottom here. I'd like to see more than this, but I do think this is a really good level to look for a potential trading opportunity. Where would I be interested in taking it back to? Well, right up in here, our previous level of structure, this little spike right here, you can see that's right below an even handled number. When I say even handled number, I mean numbers that end in 0, 0. They're psychological numbers, right? Human beings, we like psychological numbers. We like numbers that end in zeros or end in 5 zeros because it's easy for our brains to understand. And it sounds weird, but keep an eye on the market and you're going to see the market respect these levels over and over again. So I think a move back up to 197 is certainly doable. We can bring some more stuff in here that looks like a, 3D2 fib? Between a 3D2 and a 50% fib. Oh, right at a 3D2. You should have more confidence in yourself, Akil. Right at a 3D2 fib in there as well. So some pretty decent confluence. Let's just bring some volume. I don't think we're going to get a lot of volume at that level, but I could be wrong. Yeah, the volume comes a little bit. I would expect it up here. A little spike, a little bit higher. But yeah, I think that 197 even handle is a good conservative entry. And again, remember, as a counter trend trader, we're just looking to be in and out. We're not looking to keep this thing and ride it all the way up. Kind of like the euro pound trade I took in the trading battle. Like, get in, quick move, get out, make the money, baby. Euro Aussie is in a similar situation. Not the same, but similar. But you can see we made a very aggressive move up. We put in, once again, another head and shoulders pattern, right? I've got a few of our traders working on this, so I promised I would identify as many as possible, but a nice little classic reversal pattern here in the market. And we've rallied up to a previous level of structure where we have approached it, we have probed it, and we have held. Once again, broken record alert, right? A lower low, lower close would be a good opportunity to get involved here. You can look for a double top and maybe a lower time frame as well. However you want to get involved, right? It's entries don't matter too much. For you guys that didn't see it yet, I put out a podcast at the end of the week talking about 20 of the top trading lessons from Mark Douglas's book, Trading in the Zone, which is a must read in my opinion. One of the lessons was pretty much that your entry doesn't matter, or it matters, but not as much as you think. A lot of newer traders think the entry is the most important thing in the world. That's what's going to give them the glory. What's more important is the prediction, right? If you just get good with analyzing the market, get good with making the predictions, and then you can just pick whatever type of entry you want, from the very aggressive to the very conservative. So this is a perfect example of that. Make sure you go listen to that podcast or watch that podcast. It's a really good one. I still recommend you read the book, but if you don't want to read the book, you can take kind of the top lessons from there, at least till you get a chance to read it. But yeah, decent level right here. I would expect us to return to our shoulder, right? Our shoulder of the head and shoulders right down here. Here's our next level of structure to the downside. Maybe a little bit above that. Speaking of even handled numbers, there's a 178 even is right above that. So a good place to keep an eye on right there for a short. We go down to a lower time frame. We've got a little bit of a rising channel as well here. We've got some divergence. Divergence, again, is when my indicator / oscillator is doing something different than my price chart. Price chart is showing me higher highs. RSI, my choice of tool, is showing me lower highs. So a little bit of divergence there, just another clue we can add to the mix. Would not be surprised if we saw a move back down to 178, and then the market could decide what it wants to do after that. Another sneaky zone, if you want to be greedy, would be right here as well. This little guy right around 177.60. If you want to be a little bit more greedy, you can aim for that as well. Euro New Zealand, similar situation, but a little bit different. Real quick, let me make sure we don't have a cipher here. I don't usually look at this pair, but I think we might not maybe have one. Oh my gosh, we do. That's going to add to the equation here. Look at that. I find new things when I do this video each and every week. Okay, look at that. So we just hit a cipher pattern completion, X to A to B, bearish, B to C, and C to D right here. The original idea was a structure trade, but this is going to line up right with it. So what I was going to say as I delete all this stuff is that we came up to a previous level of structure right here. And you can see that we obviously held. We had a nice spiky wick here, which breached it and came back. Now, we're currently putting in an inside bar. And what you'll notice is that as we go down to a lower time frame, well, I'll just show you. To a lower time frame we go. Boom. We have a little bit of a dilemma. Higher time frame, we have a higher high, higher close, or a hold of structure, excuse me. Lower time frame, we have a higher high, higher close. We have a video somewhere on YouTube about this as well. But the question is, what do you do? And the answer will be different for different traders. In the discussions we had, I always say that some traders say that I only need a signal on one time frame, and as long as I get it on one, then it counts. Me personally, I need there to be confluence. So I need the higher time frame and the lower time frame to align, or it's a no trade for me. But there are alternative ways to get involved. So what that means is that for me, I could not trade this double top because it technically had a higher high, higher close. And if we had a higher high, higher close, you know how it affects the whole prediction thing. But what I can do is I can look for that 26.18 opportunity, which is a trading strategy in its own right, but also an alternative reason to get involved in a trade. So wait for price action to break this level, violate this level, excuse me, retrace, and then we can look to trade it down to about this level right here. So this is the zone that I would expect us to come to. Let's look at any funny numbers there. We have 194.78, 194.50s. I would be interested to see kind of if we have any volume in that level right above the high. Yeah, we're about 194.62s, and I think that's going to be a 50% Fibonacci fib as well. Ooh, a 382, right between 382 and a 50%. Ah, that stinks. Well, it's a good level to identify. Stinks as far as pinpointing that zone. But yeah, I would say anywhere between this level is a good place to look for targets in this trade. Next up is Euro Canada, and this is interesting, right? Similar move to Euro New Zealand, but not quite the same. Canada has its jobs numbers coming out this week as well. But in this one, on the higher time frame, right, we got a higher high, higher close, right? So we did break and close above this level on the 4 hour. So my expectation is a bullish move here, but I don't want to be bullish right away. This is one of the things that I had to do in the trading battle that I wouldn't do in real life that got me into trouble, but also got me into a profitable trade. So it's, you know, it's pros and cons to it. But what I would wait for here is, instead of buying right now, because this is the most expensive point, I would wait to see if we get a pullback into this level and then see if I can catch the extension. Now, there is the chance that this becomes a head and shoulders pattern and it does something like this and it reverses back downwards. But to ease your anxiety around that, I would tell you this. The market can do whatever the hell it wants. You have no control over what it does. So there's no point in stressing of if it might turn to this, if it might turn to that. Your job is simple. Trade the probabilities that are in your trading plan. If the market wants to agree with it, it will agree with it. If it doesn't, it won't. One trade doesn't matter in the bigger scheme. So don't overthink and stress out. A lot of traders do that. Well, Akil, what if the pullback turns into a head and shoulder? What if the head and shoulder turns into... And then you get the dreaded paralysis by analysis, right? Where you're analyzing a chart and then you just all of a sudden, help me. Right? And you do nothing because you're overstimulated with trading ideas and fears and multiple signals and stuff like that. You know, simple. Trade your plan. Have a plan, trade your plan, do the analysis that suits for you. Don't try to overthink. If it does turn into a head and shoulders pattern, guess what, right? You're trading right here, here somewhere, right? Your stop is below here. If it turns into a head and shoulders, guess what? You'll be stopped out. And now you can just look for a reason to trade the head and shoulders right to the downside to this area right here. So yeah, there you go. Next is going to be the pound dollar, where you guys can see it. We spoke about it all week. We had our head and shoulders pattern complete. Left shoulder, neckline, head, other neckline, symmetrical right shoulder, and then boom, right down. Now, this was something that we did eye up in our live trading room all week. I wasn't interested in it because I was only expecting a move to right around here, but the market says, Akil, I don't care what you expect. I'm going to do whatever the hell I want, and it did go further. Now, what's interesting about this is two things. We actually put in a very nice harmonic move. Typically, when we think of harmonic moves, we think of harmonic patterns, but that's not always the case. One of the simplest, most classicest harmonic move here is going to be the AB equals CD pattern, where you simply measure the length of extension 1. That's going to be this move right here. Copy and paste it. Find the pullback, and you would expect an equal level or equal length extension for extension 2, and that's going to be the AB equals CD pattern. You can see that came right to a previous level of structure, right? If you're a CTS person, you're going to love this. I'll add up the score later. Now, if you look closely, there is also one more thing here that we can identify. I'm going to stretch this out some and see if you guys can see it. We'll play the game. Type in below. Can you see the pattern if that wasn't a big enough clue? Pause it if you need more time, because I don't just want to sit here. But we take a look at a move from here to there. We have a swing low to swing high. We then have a retracement past the 382 to the 50% retracement. We then have an extension that goes up to hit a 127, just barely. You guys know what I'm getting at here. That means we actually had, and I'll use this tool again to make it clear with the X's and the A's and all that fun stuff. We have an X to A, zoop, A to B, zoop, B to C, loop, and a CD completion right down here for a cipher pattern. So if you are a CTS trader, and CTS stands for the Combined Technical Scoring System, it was pretty much a scoring system that my mentor created to quantify and classify your trading opportunities. Instead of just looking at random things on the chart, you want to be consistent in your approach. So if you have a list of, I always look for these things, if you assign those things point scores due to their importance, all you have to do is a little quick math. You look for the thing, you add the point score, and boom, you've got some points here. So here on the pound dollar, you've got 3 points for advanced pattern formation. You've got 2 points for an AB equals CD pattern. You've got 2 points for a major level of structure. You may or may not have the RSI oversold. We do have it oversold. Another point for the RSI oversold. So you're building a pretty decent CTS score. So a nice trading opportunity here. We are still below the technical cipher entry, so you can still get in for the cipher if you want. Another option would be going down to a lower time frame, and just like the euro dollar, maybe waiting for some type of reason for entry down here. But just thought it was a cool opportunity to analyze. Lastly, we're going to be here on the Dixie. For you guys that were looking at the Dixie butterfly pattern, congratulations. It worked out perfectly. This thing stopped on a dime. Watch this, right? Fibonacci extension. Boom to boom. We're looking for that 127. Ooh, baby, baby. Ooh, baby, baby. When I say it stopped on a dime, I mean it stopped on a dime. Again, very similar to the trade that I missed by 1 pip that would have made the difference in my trading battle. Came right there, and yeah. Anyway, we have retraced, and we've come back into a pretty nice level of structure, right? If I look at this structure level right here, this was the last kind of stopping point before that big breakout. If I drag this left, this was the B leg. And if I drag it lefter, reaching a little bit here, this is around the X leg. That's a little bit of reach, right? So we'll just take these 2 levels right here. But you can see price action has come to that level. By the way, a good example of divergence going into our D leg of the butterfly as well for you guys tracking divergence. Look at that. See, easy to find when you know what you're looking for. Once again, this is going to be a decision point. 1 or 2 things are going to happen here. Either we are going to hold this level and see a return of bullish action, or we're going to violate this level and go back down to the downside, which is good. I like having these decision points because it makes trading very easy. You can plan for both and then wait for the market to give you a clue. If we get onto the hourly, however, if you're someone looking to get long, we have a nice double bottom that has formed. Price action has come down. We got some nice little wicky candles. We did a brief retracement up. We're retesting again. So far we held. It'll be interesting to see how this reacts on the open. Check your data. Mine held by like a single pip, but make sure that this most recent candle did not violate breaking close below that candle. But this could be a nice buy for a double bottom. Or, as you mentioned before, if you're more conservative, just wait for the 2618 and a little bit more proof. Speaking of a little bit more, if you want a little bit more than just the videos here on YouTube, I recommend you check out our website, www.tier1trading.com. Here's what I need you to do. Start with the 14-day risk-free trial membership. It gives you access to the platform. You get to talk and interact with the community. You get to take a few courses. You get to join our live sessions. You get 14 days to kind of feel us out and make sure that we're the right fit for you as far as how you want to learn how to trade and what you want to learn how to trade. It's risk-free. There's no auto bill, so you don't get secretly sucked into like some payment subscription thing. You just get kicked out. So give it a try, www.tier1trading.com. Hit that like button before you go. That way you get alerted of the next video. And hope you guys enjoy your weekend. Take care.
I want to be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain, I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, mud, disease, a plague, we all love to hate, have to play the game, have to make a name, all our insecurities are on display.